Hey, what's going on everyone? It's Griffin here, and as always, I hope you're having a fantastic day. Now, in today's video, we're going to be covering a handful of growth stocks that I believe you should be adding to your watch list and just keeping on your radar moving into the month of May 2021. Man, May 2021, it seems crazy. It was only a couple of days ago, it would seem, that I released my April stocks to watch video. But yeah, in that April stocks to watch video, we spoke about Amazon, Trulieve Cannabis, Baidu, as well as TDoc. Amazon, I am just so bullish on this company's continued growth over the next decade. They're just expanding into so many different avenues. Same thing for Trulieve. I'm extremely bullish on this company, and if you've been watching that stock, yeah, we saw a hefty pullback into the mid $40 per share range, presenting such a tremendous opportunity, in my opinion, to either open up a position and or lower your cost basis. Now, the month of April was also in a period of slight NASDAQ decline actually, where rotation out of tech and into more stable blue chip companies did lead to some pretty fantastic deals. So hopefully you did manage to snag some of those for a longer term hold. In fact, please also do keep in mind that even though this video is titled Stocks to Watch in May 2020, yeah, stocks to watch, by the way, not necessarily stocks to buy, just keeping these on your radar and in your watch list for now. Well, I would still only recommend investing in these companies if you're looking for a multi-year hold, at minimum 2 to 3 years, as we're investing or trying to invest in companies that are showing great promise for future growth in their operations, and therefore, typically this is also going to be reflected in appreciation or capital appreciation in our portfolios. Now, since last month, there has also been quite a bit of progress regarding the vaccine rollout across the United States. This is definitely positive news for business reopening and hopefully staying open for good. Same goes for Canada, but on a much smaller scale, and there are far more restrictions here, but we're still trying to stay positive and look at the silver lining here for an imminent solution to this havoc over the past 2 years. Alright, so with that said, let's jump right into the first growth stock that I believe you should be adding to your watch list in May 2021. We have Tattooed Chef, ticker symbol TTCF on the NASDAQ. And yes, I know this is a stock that has received a lot of attention lately on YouTube from many different creators. Even myself, I had spoken about this company a couple of months back, and I am a shareholder, but for a relatively small position in my overall portfolio, and considering what has happened to the share price over the past couple of months, I definitely think that this is a company that you should be adding to your radar. So yeah, the main reason why I am speaking about Tattooed Chef as of right now moving into May is because of its massive dip in share price over the past couple of months. In mid-January, TTCF was trading for $26.81 per share, and since then we've pretty much seen nothing but consolidation down to a market price of now only $17.50, representing a drop of nearly 34%, and it even reached as low as $15.50. And really, this massive sell-off of Tattooed Chef's stock has pretty much just presented a massive opportunity for investors to either lower their cost basis further or potentially even open up a position for the first time, because this company is seeing tremendous growth quarter over quarter and year over year. So pretty much with the stock going down in value, the lower it goes, the more attractive it becomes from an actual valuation standpoint. The same holds true for other companies that I'm personally invested in, like for example Trulieve Cannabis. Now, if you aren't fully aware of what Tattooed Chef does as a company, well, they essentially make vegetarian frozen healthy meals, and typically frozen and healthy don't necessarily go in the same sentence in regards to food, but this is exactly what Tattooed Chef is looking to change. This company has basically identified a large gap in the market where individuals want both convenience and health brought into one single package, and there is a massively growing consumer base for this type of product. The way I personally see this is that over time there have definitely been different trends around dieting, but healthy food and convenience is something that I believe is just here to stay. Honestly, we are more and more busy in our lives. We don't necessarily have time to cook 3 healthy meals a day, but consumers and individuals still want to eat healthy food. You don't necessarily want to pound back a quarter pounder every day. So this is a type of product that is really convenient, but also is helping us eat a more balanced and healthy diet. So yeah, my point just being seeing here that I definitely think this company is here for the long run, and that's very evident in their rapid growth in top line revenues. Regarding Tattooed Chef's financial performance, this company is honestly just growing by leaps and bounds, where year over year since 2019, top line growth was 75% up to 148 million, which is massive. I mean, seriously, this company is moving huge quantities of inventory, and based on their continued level of growth recently, it would not surprise me if we see TTCF posting revenues exceeding that $250 million mark over the course of 2021. They're already in target locations in the US, and as they continue to expand their distribution network in more retailers, this is only going to result in the company catching more wind and skyrocketing their revenues. In fact, Simply Wall Street has projected revenues for TTCF at roughly $450 million by the end of 2023. This is very soon, and I believe is highly achievable, and considering these growth figures, it also would not surprise me if we see TTCF posting net income in the 10 to 15% range. Now, this past year was a large one-off contributing to significant net income, but moving forward with this type of top line growth, truly this is a company that you should at the very least have on your radar considering the current price point. And let's also not discount this company's balance sheet, which is tremendous. Current assets above 200 million with over $130 million in cash, contrasting this to their current liabilities at only $30 million. And the same holds true for their total assets versus total liabilities. Really great ratio all around regarding this company's financial position. And I can already see down in the comments, some people may be commenting on the fact that the CEO has actually sold off a large portion of his shares. But in reality, insider selling is not necessarily a bad thing, right? Who knows what this individual needs that capital for? There might be other opportunities. He wants to diversify out of only Tattooed Chef. And at the end of the day, he still owns 37.8% of the company, which is massive and really still shows this individual's conviction in the future growth of his company, right? So regardless of the fact that Tattooed Chef has seen quite a bit of hype and discussion lately on YouTube, well, the reality is that this is still a company that is growing tremendously year over year. Their balance sheet is top notch, and their valuation basically just got slashed by 40% in the matter of only a couple of months, with the company's underlying growth still reflecting massive potential longer term. I mean, seriously, little has changed in this company's underlying fundamentals from only a couple of months back. If anything, the company is in a better financial position than it was back then. So if you were interested in buying the stock at $25, $26, then right now this should definitely be a buying opportunity, or at the very least, like I said, just keep it on your radar and your watch list. All right, moving on to the second growth stock to watch in May 2021. This is a brand new stock to the channel that I believed needed some further analysis from my part after using the platform to buy some new artwork for my house. The company I'm speaking about is Etsy, ticker symbol, well, Etsy on the NASDAQ, and shares of this stock are trading for right around $215 a piece for a market capitalization of $26.6 billion. Now, I am not a shareholder of Etsy at the present moment, but I am looking into the stock further because their past and future projected growth are really fantastic, and after using the platform, I'll definitely continue being a user because the experience was pretty great. Now, if you aren't familiar with Etsy, it's an online marketplace that connects buyers and sellers who are mainly exchanging more personally crafted items. In this sense, it isn't necessarily a direct competitor to, say, Amazon, because the product selection is quite different. If you go on there and browse the website, you'll immediately understand what I mean by this. In parallel to Amazon, though, Etsy does have sellers on their platforms, and Etsy has been attracting a tremendous amount of new sellers. As we can see here, year over year since 2019, the company has grown their number of sellers on the platform by 61.7%. That's pretty major and has directly impacted the company's financials. We're seeing exponential past top-line growth for Etsy, exceeding $1.7 billion in 2020, and considering their scaling speed, the company is expected to continue on this trend, reaching above $4 billion in revenues by 2025. The same holds true for their bottom line, expected to grow by an average of 23.1% over the coming years, which is really nice to see. In fact, considering this growth, their forward price to earnings is quite a bit lower than that of the trailing 12 months. So even considering the fact that Etsy is growing extremely rapidly from a user and top line growth standpoint, we still can't discount the the fact that it is quite expensive right now. With that said, this chart right here shows us the past price to earnings ratio for Etsy, and we can see that it's actually been quite high over the past couple of years. This doesn't necessarily mean that the price point is still justified, but what it does tell us is that this stock has commanded high PE ratios for a sustained period in the past, as it's a higher growth play. So with this in mind, considering a lower price to earnings ratio moving forward for Etsy at, let's say, 60x, well, this would mean that considering the projected net income figures for this company in 2025 at this more conservative 60x PE, I know that sounds pretty ridiculous, 60x PE being conservative, but for this company, it is in line with their past performance, or should I say their past valuations. Now, this would mean that the company would have a valuation of roughly $60 billion, roughly tripling the company's market value. Now, in regards to their financial health, Etsy also has a great balance sheet with a current ratio of 4.17, considering their $1.24 billion in cash and cash equivalents. Total assets of $2.4 billion and total liabilities of $1.66 billion also give Etsy a nice total ratio. So yeah, Etsy is a stock that, while it has significantly ran over the past year or so, this holds true for pretty much all tech stocks in this current market environment. And being an online marketplace, an e-commerce marketplace, well, this means that Etsy is most likely going to continue seeing that explosive growth in top line. It is definitely an expensive stock though, so definitely do keep that in mind. But considering everything that we just spoke about, I could see Etsy fetching valuations 2 to 3 times higher than what they are right now over the coming 3 to 4 years. Definitely don't be surprised though if we do see some higher volatility for this stock, considering how much it has ran over the past year and considering the fact that it is a tech stock at a pretty high valuation right now. But regardless, over that period of time, I do think that if you are looking for a longer term e-com play, this is also a great option to at least keep on your radar. I really hope you're enjoying the video up to now. If you are, make sure to smash the like button. It really helps the channel out. But moving on to the third growth stock to watch in May 2021, we have PayPal, ticker symbol PYPL on the NASDAQ. And yes, I know I spoke about PayPal only a couple of weeks ago, but this is a stock that I hold in my portfolio and do have strong conviction in, considering the growth of online transactions with e-commerce. To be honest, I'm just very bullish on the growth of the fintech industry as a whole. So not just PayPal here, there are other great alternatives like Square, Visa, etc. But I'm just very familiar with PayPal's actual products. I've been using it for years and they have a very consistent growth in top line. So this is a company that I personally feel comfortable with investing in, and their stock price has recently receded down a bit. Now, I'm not going to spend too much time here reiterating PayPal's business model. Most of you are familiar with the stock and the company in question, but with the ever-growing need for online transaction services, PayPal is just really well positioned for some tremendous future growth. For example, in 2020, PayPal added over 72 million new active accounts to their business, bringing their total figure to over 377 million active accounts. I mean, if you think of this, PayPal has been around for now over 2 decades, and in the last year alone, they grew their active accounts by 23.6%. That is just some major growth for this company, with millions of new users that will now be online shopping over the coming years, with PayPal as a means to pay for their purchases. If we're being honest here, the pandemic and shopping from home was really a further catalyst for PayPal's continued growth. And now this graph right here clearly highlights the explosive growth in gross transaction volume flowing through PayPal, where in Q4 2020, PayPal transacted over $277 billion, which is up 39% over the same quarter last year. And this obviously translated over into a fantastic year for PayPal financially, with revenue growth of 22% at $21.5 billion, which is tremendous, and their free cash flows were just shy of $5 billion, representing growth of 48% over the year prior. Future growth for PayPal is also following a nice growth trajectory in line with the amount of new users to the platform. And with these new users, this will without a doubt have a continued positive effect on the company's top line as well as bottom line and free cash flow figures, as long as PayPal is able to stay relevant in the transactions processing business. Speaking of relevant online payments though, PayPal also owns the peer-to-peer secure digital wallet app Venmo in the United States, which processed $160 billion in 2020 and added 70 million new active accounts to the app. They've also rolled out a cryptocurrency wallet where users will now be able to use Bitcoin and other cryptos to transact with merchants that accept them. So even though PayPal is also quite expensive with a trailing PE of 75.15, their forward PE right now is at 46.27 and their price to sales is around 15x. I could see this stock easily head back above $300 a share by the end of 2021, most likely even hitting $315. I think that if you're willing to hold on to the stock for a couple of years, PayPal is one of the better bets that you can make in the fintech space to ride the wave of e-commerce. Oh, and one last thing that I find interesting about PayPal is that even with the imminent reopening and permanent, hopefully, reopening of brick and mortar retail, they're rolling out new QR code scanners to allow customers to pay with PayPal even when physically shopping in a store. This is going to allow them to also tap into that retail purchasing experience. All right, moving on to the fourth and last growth stock to watch in May 2021. To be quite honest here, I was really tempted to once again include Trulieve Cannabis, ticker symbol TROL.CN in Canada, TCNNF in the United States, considering the recent drop in share value, which was really significant. And if you have been following the channel for a while though, you are aware of how bullish I am on this company's future growth, and hopefully you have been watching it or it's in your portfolio. So considering this recent drop, I hope you were able to either capitalize on this or maybe even open up a first position. But instead of being a broken record, let's speak about a new stock. So yeah, for this fourth stock, I wanted to bring something a little bit different to the table. So I did some further research into certain industries that I believe will have or experience some major growth over the coming 5 to 10 years. And one of these industries, which we spoke about recently, is cybersecurity, right? With an ever-increasing amount of sensitive customer data being held by companies either on their local servers or even in the cloud, there is an ever-growing need for companies specializing in cybersecurity and protection. And so I filtered through some of the top companies in this space, including Okta, Zscaler, Fortinet, as well as CrowdStrike, but I found one company that seemed to be trading well below the industry peers and also shows tremendous growth and potential for share appreciation over the coming 12 months and beyond. And the company I'm speaking about is Palo Alto Networks, ticker symbol PANW. The share price is currently $358.42, translating into a market cap of $34.85 billion. Now, PANW is an American cybersecurity company that specializes mainly in firewall appliances and software. They also offer subscription services to counter various areas of threat prevention, cyber attacks, malware, and other forms of cybersecurity. Now, from an industry-wide need for cybersecurity, let's speak about the growth of the industry once again. So here's a graph showcasing the forecasted growth of global cybersecurity through to 2023, where it's expected to reach just shy of $250 billion. That's huge, and as one of the top players in the space, Palo Alto should continue growing in parallel to the increased need for these types of cybersecurity services. Over the past 3 years alone, Palo Alto Networks has been experiencing consistent growth, with 2020 at $3.41 billion in top line, up 17.6% over 2019. In fact, at a price to sales ratio of 9.17, this makes PANW among the cheapest stocks in the cybersecurity space. Industry peers like Fortinet have a PS ratio of 12.7, CrowdStrike is sitting at 53.86, and Zscaler is at 47.2. Now, while the company isn't yet profitable, their earnings are expected to grow by an average of 45.67% over the next 3 years. Their top line is also expected to grow by an average 15.1% during this time frame to reach $7.7 billion by 2025. The company is also very cash flow positive at $1.2 billion over the trailing 12 months. I think that considering the current price down around 11% from the 52-week high, we should see Palo Alto stock continue to gain momentum and break through the 450 mark by the end of 2021. Actually, 24 analysts even have quite bullish ratings for PANW at an average target of $451, which should show a nice 27.87% upside for the stock, which would be fantastic for a 12-month period. So that's pretty much it for today's video covering 4 growth stocks to watch in May 2021. Obviously, there are dozens of other great companies that I could have mentioned here, and also keep in mind that I'm not saying that these are stocks to buy, rather they're more stocks to watch, keep on your radar, and potentially open up a position. Typically, the same holds true for the other stocks I speak about on the channel, and I would highly recommend that you check out all the other stock pick videos and stock to watch videos that I have in my stock playlist on YouTube. Now, obviously, if you enjoyed the video, all I ask in return is that you smash the like button. And if you want more investing content, then make sure to subscribe and hit the bell button to be notified of my new and upcoming content. If you're also new to investing and you need to open up a brokerage account, then make sure to check out the links down below to resources that I personally use and recommend. And then finally, if you're looking to take your investing to the next level and you really want to fully understand how to analyze companies, what to look for, and craft a portfolio that suits your needs as an investor, then make sure to check out my full 60 video lecture course where you're going to learn everything that you need to know in order to be a well-rounded investor that's able to navigate the market. So with that said, thanks a lot for watching today's video, and I will see you in the next one.